Welcome to another Oki trade study session. So I want to break down a multi-day breakout chart on ANVS today. Obviously, you can see here that it made an insane move, and I want to kind of show you exactly what I was thinking about when I was looking at this stock last night. So as we go back and look at the daily chart, you can see that it's a stock that is way off its highs. But also another thing you can see is that the stock doesn't trade much volume at all. So that's kind of the key for one of these multi-day breakouts is, if it's going to be a stock that's not breaking out of all-time highs, well, it needs to be a stock that doesn't trade volume at all, and then out of nowhere, it starts to trade volume on the breakout setup. So as we scroll in here, we had a stock that made a big move on huge volume, pulled back, and then it made another big move and closed close enough to this high right here on Friday that I thought today, Monday, that it would break out. And obviously it did. So yesterday, if it would have broke out, we would have called it a day 3 surge. Today, since it broke out on day 4 or later, it's a multi-day breakout. It can become a multi-week, multi-month, multi-year breakout, just depends. I prefer the multi-day breakouts versus anything. I just feel like, I don't know, they always work the best for me, but I guess I really haven't tracked that specific scenario. I guess I probably should look at that, like which ones work the best, multi-day, multi-week, multi-month. At any rate, let's get into it. So I know that it closed close enough to this high, and if you want to know like all the finer details of the setup, I've broke it down in my video titled Oki's favorite patterns, so that should be easy to find. And yeah, so let's get into the intraday. So we know that this is the breakout level, right? We have that marked. Now let's zoom in. On this setup, I'm always wanting to play first high of day versus low of day or last best dip, whichever is more clear. So when we opened today, this would have been the play, but I kind of messed it up, and I'll go over it briefly because I don't want to confuse everybody, but at the same time, I want to help the advanced traders that might have missed it right here as well. So you don't ever want to buy a stock that spikes up too much at the open, right? So this stock opened up at 11 and shot straight up to 12. And then so in that moment, I thought, oh man, that's too much of a straight up spike that if it doesn't give me like cleaner, longer, tighter risk reward, I can't really buy it right here. But in hindsight, and now not really hindsight because I fully understand why this was a good entry, which I'll get into. But in the moment, I thought this was a bad entry, so I passed up on this. But this is typically what you want to do. You want to buy first high of day versus this is low of day or last best dip, whichever is more clear. Obviously, last best dip here. And then we get this huge move up, right? So at this point, I'm thinking, okay, we're holding up, we're going sideways, we're holding over the breakout, we even dip over the breakout. So I got long over this high day, risking this dip right here. Took really big size, and as you can see, it stopped me out right there. And that was a full max loss, one of the biggest losses on any single trade I've taken. Now, in looking back over it, I should have been long here with a stop right here. And then, maybe I would have added here and I still would have stopped out here, you know. But potentially I could see myself if I would have added here, just risking here because I'm already long from here. So I'm getting a little bit advanced. but that could be hindsight. At any rate, I did lose here, and then I noticed that I basically got bottom ticked out, right? And it instantly spiked back up, held up, and did what? It created a wedge overneath the breakout level, which is this horizontal line. So, couldn't miss this entry. And when we came up right here, I tried to buy it and it flew past. And so I missed it and I thought I was going to miss it completely, but it pulled back and then I got lucky. So then I bought it as it broke right up right here. And my risk was like right here. And I knew that it could run to 19 because I knew that it had $8 per share potential from low of day. Low of day was 11. So I knew it could go $8 a share higher than 11, which was 19. But after taking this huge loss and then getting back in, I actually took small size compared to my risk level because I was only risking about 15 cents. And because actually I think I caught it right here. But anyways, I was only risking 15 cents and I basically took a little bit less size than what I was here, which was twice the amount of risk or 3 times. And I ended up just selling half here, and then I scaled out um, some more here, and then I was hoping that it was going to continue higher, and then um, yeah, after this big spike and fell, I just cut it right here once it cracked under 15, and then obviously it's chopping, so probably has a nice gap up tomorrow, and but I didn't want to swing it, and any rate, so overall, I made back my money that I lost, and I had another good trade on NNE, so it was a green day for me, but big, big kind of underachievement, I should say. So I'm gonna break down why that first high day entry was really good and why it was so bad that I missed it. So what's this breakout level? 1260. All right, clean the chart up. 1260 is the breakout level, right? Okay, so if we know that it can run $8 per share from low a day, this is how I'm going to start doing the math to find out if the first high of day versus low of day or last best dip, whatever, is actually up too much. Because in the moment, I thought that this entry right here, I thought it was up too much, too fast to be buying it right there. But now that I'm looking back and I was going over a bunch of my trades, I really see that this was quite a really good entry. So again, I'm going in circles here. We knew that the stock could go up 8 per share from low a day. So low a day is 11. So we knew that it could run $8 from 11. So 8 to 11 is 19. Okay. High day here is 1210. So 1210 would be the entry and 1150 would be the stop. Just like normal. But now this is how we find out if it's going to be good. So we know it can run to 19 and our entry is 1210. So we do 19, our target, minus our entry of 1210. Bust out the calculator here. Let's go 19 minus 1210 equals 6.9. And we know our stop is 60 cents, so we would divide that by 0.6, and we have 11.5 to 1 risk reward. So 19 target, 1210 equals $6.90 of potential gains, and our risk is 60 cents, which is 1210 minus 1150. So take 6.9 and then you divide it by your risk, which is 60 cents, which gets you 11.5 to 1 risk to reward. Okay. So now that we see that we have 11.5 risk reward, I'm going to say if you at least can get 3 to 1 risk reward based off of your target and your entry and your stop, then take the trade. Now, I can't tell you what to do, but that's personally how I'm going to be doing it from now on. So if I see a stock that spikes up a little bit too much at the open, well, I'll just do the math and make sure, okay, if I buy it here, risking here, am I still going to be able to get 3 to 1 if it hits my target? If I can get 3 to 1 or better, based off of that, I'm taking the trade 100% of the time. So if I would have taken that procedure, I would have made, let's just do this. All right. Because high of day is 1730. Okay. So 1730 minus 1210 equals 520. We know our stop was 60 cents, so we divide that by 0.6, and we would have made 8.6 to 1 risk reward. So let's just say you're risking 100 bucks. You times that by 8.66, you make $866. I potentially was going to risk 500 on this trade, times that by 8.66. I should have made 4,300, but I only made $300 after losing $300. So that just goes to show you how risk to reward like can be skewed really good for you or really bad for you based off of where you buy it, based off your entry, based off your stop, based off your target. So from here on out, I'm just really going to take it slow. I'm glad that I at least bought it right here, but see what I potentially should have done was buy it right here. And then when this has this really hard pullback, now I know I have my new risk right here. And then it sets up right there. I can add with this new stop. And it pulls back. And then now we get this really sweet wedge. Add again. And probably since I'd be in here and here, I'd definitely be moving my stop up to right here. And then we get this huge victory where I'm just scaling out into the big spikes. Potentially could have made 10,000, something stupid like that. So I'm really, really going to focus on nailing these stocks. Less is more for me. Really focus on sizing up and making sure that I'm in the right spots at the right times. All right, everybody. Hope you enjoyed today's study session. I will see y'all tomorrow. All right. Take it easy.